Adekola. I'm Acting Director for the Department for International Trade here in Nigeria, and I'm also Director for Financial and Professional Services across Africa. I am delighted to be your moderator today, and we will be touching on we'll be touching on various aspects of foreign direct investments and basically toying with the various processes we can deploy to increase FDI flows in Nigeria and Africa as a whole. But to set the tone for today's event, I would like to introduce Dr. Robert Bersley to give the keynote address. Dr. Robert Bersley is founder and CEO of EXS Africa. Dr. Robert Bersley founded this specialist intelligence company in 2015, and the company has grown to be one of the leaders in political and economic risk, and have advised quite a number of players in the private and public sector. Dr. Bersley, over to you. Let's get a keynote address. Thank you.
Good afternoon, Lami. Good afternoon, ladies and gentlemen. What a wonderful and exciting event so far. Thoroughly enjoyed the conversation on the AFCFTA and, of course, Professor Arama's address as well. Lami, you already introduced me. It's a pleasure to join today from South Africa, where I currently am. And a great pleasure to talk about some of the exciting developments happening in Africa and in Nigeria specifically. A keynote address is potentially, sounds a bit formal. I'm more going to give some initial thoughts before we can open up to the panel. And in order to do that, just cast your eyes back to the beginning of the pandemic, where we were all uncertain to where we were going to go in 2020 and beyond. And some real nightmare scenarios are being played off by many pundits. We Africans, we always knew we were going to be hit last, and we always thought we were going to be most vulnerable. Now, I'm not trying to downplay the pandemic in Africa by any means, but let them be revealed. Other countries which are particularly vulnerable at the moment are countries where the economy was not performing well anyway, pre-pandemic. Countries like Nigeria were still recovering from the 2016 recession. Countries like South Africa, which is toying with a low growth period. And then, of course, those countries which have been vulnerable or over-dependent on commodities like oil and gas. Again, that puts Central African economies in the frame, and similarly, countries like Nigeria, other oil producers, oil exporters as well. So certainly, for some of those countries I just mentioned, there is still a long slog towards economic recovery ahead. But on the other hand, a number of African countries are set to do relatively well, relatively speaking, on African standards or globally even. A number of emerging markets within Africa are set to record some decent growth rates still this year. Many of these are based in West Africa, countries like Benin, Senegal, Ivory Coast, or some Central East African countries too, like Rwanda, for example. But this is mostly because, one, these countries have moved towards economic diversification and pushed ahead with many of these hard reforms very early on at the best of times. Countries with a more diversified economic base have steered into the pandemic on a stronger footing than many others. For example, countries which have been over-dependent on oil and gas, for example. And then we have to ask, thirdly, what is next? Well, this, of course, remains a huge question mark. But in terms of potential opportunities that we can see, first of all, we have seen a real demand for digital platforms, virtual platforms, and digitization of trade. I'll be trying to get all together at a time when we were all very far away from each other. At the same time, we are moving ahead with development in renewable energy, moving away from on coal and oil and gas in certain countries, and moving towards wind and hydropower in a more sustainable and diversified power mix. This we're seeing across the spectrum, but particularly again in West Africa. A number of other opportunities have come up as well, particularly in the healthcare sector. And this is really interesting because all countries have taken a different way of dealing with the pandemic. This is not something we've seen globally. Many countries have taken very standardized ways of locking down and dealing with the pandemic. But in Africa, really, we've taken a more country-by-country scenario. And we can see this, for example, in Nigeria. At the federal level, the measures that were imposed earlier this year, in fact, there weren't that many of them. The real deal with the pandemic was taken in charge, was taken upon by the states, as well as the private sector. A grouping called the Coalition Against COVID, comprising about 100 private enterprises, raised about $80 million alone to combat the virus in Nigeria. In each Nigerian state, we've seen new entrepreneurial ways of dealing with testing, ramping up capacity, and imposing social distancing measures, and also to try and innovate the economy, continue trade, and push for continued local and foreign investment. Now, obviously, let's not downplay that Nigeria's economy has taken a very hard knock, mostly because of its over-dependence on oil and gas exports. That's something we all know. Now, the IMF at the moment expects that foreign exchange will drop by about half, $26 billion for Nigeria. Even if Nigeria taps into new loans from the IMF, the World Bank, the AFDB, and various others, it will still only come to potentially $7 or $9 billion in the best case scenario, which cannot fill that $26 billion lost in export revenues. So we need to have, for Nigeria, certainly, in the short term, a recovery in demand for oil and gas on a global level. But in the meantime, there are a number of opportunities that are opening up. And this is what we've seen in a number of African countries where this time of crisis has also led us to accelerate new forms of doing business and trade and bringing in new forms of investment. Just like Professor Arama mentioned earlier, in terms of accelerating the free trade agreement, the Nigerian economy has also managed, at its worst of times now, managed to push ahead with some of the reforms that it was unable to implement at the best of times. Now, a number of examples are quite pressing. For example, Nigeria has been able to phase out its fuel subsidies, which were a very heavy burden on its budget, and which in the end did not really benefit that many people. As we are hoping that as fuel prices increase again in the future, that these fuel subsidies will remain eliminated from the budget and take away this huge drain on the public purse. Similarly, we have seen some ambitious moves towards trying to reform the Naira currency and move towards a unified Naira currency exchange mechanism. Now, certainly, much of the momentum that we saw earlier this year, when we saw 2 devaluations of the Naira, that has subsided. But as foreign exchange reserves again plummet, pressure will rise again on the central bank and on the Nigerian government to push ahead with currency reform. And then, of course, there is the possibility that the very important petroleum industry bill, which for 15 years now has been gathering dust in various different parts of the Nigerian government will be yet again. Pre-pandemic in February, the petroleum industry bill came the closest it's ever gotten to being implemented or being ratified and being signed off. Now, the PIB, so to speak, has been stripped apart, parts of it implemented, but some of the hardest pieces still need to be agreed and implemented. This is absolutely crucial for Nigeria's future. It will allow foreign investors, major oil companies, to return to Nigeria on new terms of royalties and carried interest. It will also help with channeling funds to local communities and channeling funds to environmental cleanups after particular spills in the Niger Delta and other parts of the country. Now, these types of reforms are being very much pushed by a large section of Nigeria's business community and international partners and its development partners. And it's important that if we start to look beyond the pandemic, the countries, specifically the countries which have been hit hardest, like Nigeria, for example, whose economy may now shrink or contract by almost 9% this year, according to the government's own forecasts. It's crucial that these type of countries use this time of crisis to move ahead with a number of reforms and incentives that strengthen the economic base and make economic growth more sustainable moving forward. Is this all a dream? Is it just a vision that we are all holding out for? It's possible. We are all looking forward to going back to the new normal as soon as possible. But we have to bear in mind that these types of crises, particularly for Africa, where we have seen such a shock to the economic system and to so many people across the continent because of this pandemic, it will be crucial to implement these type of reforms and to allow for the AFCFTA to be accelerated in its implementation, to move towards a more diversified economic base, a more sustainable power mix, and to ensure a broader filtering through of revenues into various economies across the continent. Nigeria stands in a very good position at the moment to showcase and potentially pioneer on some of these aspects. And I certainly remain optimistic that some of the reforms that have been carried out so far, the re-engagement with the IMF and others, does bode well for Nigeria's future, as well as for a number of other African countries. So potentially on that more optimistic note, I'm going to hand over back to Lami and introduce the rest of the panel. Thank you already for your initial attention.
Many thanks, Dr. Beslin, has a very insightful comments, and it sets the tone perfectly for us to get to the conversations of today. FDI flows into Africa in the last 10 years have been smooth and growing. Actually, in 2018, when global FDI flows reduced from 1.5 trillion to 1.3 trillion, Africa sustained this growth and maintained it at around 11%, with a flow of roughly around 45 billion. But that flow has been going the other direction of 4% in 2019, and we expect with the impact of COVID-19, we might see a little bit more in terms of negative flows to the continent as a whole. But that said, we're here today to try and dimension the total situation base and see how Nigeria, where as well, can turn the tide and start getting the right kind of flows in. COVID means that competition has increased with other countries in the world, and other regions are competing for the scarce foreign direct investments, and Africa has to be well positioned to make things happen. And the Africa Continental Free Trade Agreement is a good starting point, because it not only improves economic cooperation between African states, but it also positions Africa as a strong bloc for trade and investment. And if everything is done right, we expect AFTA should really, really help boost FDI on the continent. So without much ado, I will get into today's activities and introduce the superstar panelists that we have today. I will have them introduce themselves very quickly, then we'll go into deliberations. Benson from CDC, please can you quickly introduce yourself and the firm you represent, and let's go ahead. Okay, I'll run on. It seems Benson is having some technical issues, but I'll go ahead to Patrick. Patrick works with FBN Quest, and I'll let him do the introductions of himself and the firm he works with and his area of expertise. Over to you, Patrick. Okay, for easier flow of conversations, I would say to all panelists to switch on their videos and switch on their mics all through. So it's easier for us to go on to everybody. But I see Benson is back on, so I'll go straight to Benson. Quick introduction of yourself and CDC in Nigeria and the role they play in Africa. Over to you, Benson.
Thank you very much, Lami. Good afternoon, ladies and gentlemen. My name is Benson Adenuga. I am the country director for CDC in Nigeria. So this CDC is not Center for Disease Control, but this is the UK Development Finance Institution. We have been working in Nigeria since 1948, and we provide fund investment to private equity firms. In addition to that, we also do direct debt and equity investments. At the moment, if you look at our funds investments as well as our direct investment and trade finance, we are roughly holding around $700, $800 million in Nigeria. We operate across almost all sectors, apart from those on our exclusion list, and we're looking to do more in Nigeria. And I'm pleased to be on this panel. Thank you, Lami.
Thanks so much, Benson. Thank you. Welcome. Patrick, over to you. Very quickly, quick introduction of yourself and FBN Quest. Patrick, you might be on mute.
Yep. Good afternoon, ladies and gentlemen. My name is Patrick Ngbermalu. I work for FBN Quest Merchant Bank, heading the investment banking activities, investment banking division. FBN Quest Merchant Bank is a subsidiary company of FBN Holdings. We focus primarily on investment banking and capital markets, and we also have an asset management business. Over the last 10 years, we've undertaken transactions raised in combination of debt and equity in excess of about $12 billion. And we've raised over 1 trillion naira in corporate bonds and commercial paper over the last 10 years as well. It's a pleasure. Thank you.
Thank you, Patrick. Welcome. And over to Toyin Sani for a quick introduction of herself and our firm as well. Over to you, Toyin.
Good afternoon, ladies and gentlemen. I'll start by thanking NBCC for this opportunity. I am the Group Chief Executive Officer of Emerging Africa Capital. My name is Toyin Sani. And at Emerging Africa Capital, we work with African sovereigns and subnational governments, as well as corporate institutions, to raise capital. And we are currently working with close to a dozen of such governments. We also work with individuals in our asset management business and with corporate investors as well. So we are a full service investment banking group with an asset management business, a trust business, and a core advisory and capital markets business. It is a pleasure to be here, and I look forward to examining this very interesting topic. Thank you.
Thank you so much, Tony. So you all can see what I was talking about when I say we have a rock star team of panelists, and we'll jump straight into it. Dr. Beslin started off by telling us about the challenges being faced as a result of COVID-19, and he also mentioned some of the actions that we've started seeing from different governments. So opportunities to take advantage of the crisis and make far-reaching reforms that are necessary. But I think the first thing we should do is to get straight to it and say, look, what does Africa need to be doing now to basically position itself better to attract these very, very scarce FDI flows that are necessary? We've heard different things from the previous speakers about activities with respect to the IPAs and how the UK government is supporting via the Gateway program to retain existing investors, and we're also supporting with respect to the investment promotion program. But more than that, let's dive in a little bit and find out what we should be doing better as a continent, with specific focus on Nigeria, to be able to attract FDI flows. And I will start with Toyin. Ladies go first, and let's for the next 5 minutes hear you and your views with respect to that. Over to you, Toyin.
Thank you much, Lami. And honestly, very important discussion that we ought to be having here. And I'm going to start with a quotation from my book, Riding the Eagle. And I say here, investment flows into a country or to a modern economy as impactful and life-giving as blood in the veins of a human body, and for a developing or ailing economy as vital and life-saving as a blood transfusion for an anemic or hemorrhaging patient. I want to say right now that a lot of the African economies are hemorrhaging patients. And as hemorrhaging patients, we need the lifeblood of foreign direct investments to, as a way, life back into us. Unfortunately, in a lot of cases, we seem to be doing, or we seem to have been doing, all the wrong things. You, Lami, rightly mentioned earlier, as of 2019, foreign direct investments into Africa fell by 10%, and untapped sources are saying now that for 2020, 2021, we can see a dip as low towards, a dip as extensive as 30 to 40% drop in FDIs. Now that is essentially the hemorrhaging patients at the point of death. So we need to have the understanding that unless we do something major and something critical, we are really in deep trouble. Now, what the questions we want to ask ourselves are, what motivates flows of foreign direct investments? What are international investors looking for in a market? Why would they come to a place like Nigeria? Prior to now, Nigeria, for example, until the prior recession and then this more recent recession, unfortunately, Nigeria was growing then at an average rate of 6.5% for close to a decade. So the market became very attractive because international investors are looking, at the end of the day, they're looking for alpha. They're looking for higher returns. Now, we are in a position where our markets are not just no longer performing at those kind of levels, but unfortunately, they're actually in recession, underperforming. So I heard Robert in his very excellent presentation earlier talking about an outlook of like 9%, drop, negative growth in GDP by the end of this year. So first of all is that we need to change that order. The second thing, which is a point that has been made but cannot be overemphasized, is that we need to put our over-reliance on commodity, on income from the sale of raw commodities. And that has been one of the challenges that not only Nigeria, but quite a few African economies have faced. Agribusiness, for example, is an area that I think we should have put a lot of concentration on, because it's an area where we can see growth if we would have deliberate policies that encourage investments in that sector. And of course, a lot of work that has been done in recent times have made this sector very attractive to youth. So what am I saying? What are our advantages right now? We have a young and growing population. We have a massive population. So areas like ICT, digital technology, agribusiness, areas that we have been able to get the youth to show, develop interest in, and where everybody can play at their level, whatever level of capital that you have access to. Those are some of the things that we need to be doing. I mean, to give time for others to speak, I would just stop by saying that there is a big role for both the public sector and we, the organized private sector, to play. For the public sector, it's reform, reform, reform. I mean, we need to show that we are a reform-minded, a reform-bound, a reform-committed market. The second thing from our perspective as the organized private sector is advocacy, advocacy, advocacy. Advocacy for the right regulatory framework to encourage investment, advocacy for the pace of reform to be sustained, advocacy for the inhibiting factors such as our security challenges, for example, such as concerns about the rule of law, such as some of the policy instability that, you know, from the perception of an international investor, and we'll talk about that later. We'll talk about interest rate policy, foreign exchange policy, and some of these things that have been inhibitors, you know, to foreign investors. So those are some of the things that we need to be talking about today. Thank you.
Thank you very much, Doreen. You have touched on very, very interesting topics and points. And one thing I take away from this is I have to be one of the very first ones to get your book whenever it's ready. And the hemorrhaging patients in Africa, some of these countries having to do the very right things to be able to stop the bleeding and most probably get off life support and start getting the economies working again. And from the public and private sector, as you said, there are different roles to be played. So I'll very quickly go over to Patrick. Same thing. What should Africa be doing right now to basically get the flows in, get FDI in?
Okay, good afternoon. I'm the angle from which I will approach this is simply picking up on the experience that I was exposed to before I returned back to Nigeria. At the time when I was in the UK, and the UK government was trying to promote what we call PFI, Private Finance Initiative, which is another form of PPPs. What I noticed was the UK government spent quite a lot of time engaging with the private sector and selling what I call UK PLC. Having spent time in the UK, then I moved across to go and work in Saudi Arabia. And at the time when I was in Saudi Arabia, the Saudi government was actually undertaking a reform of its oil and gas sector and its power sector and infrastructure. And unfortunately, at the point in time when a number of projects were being launched, that was the time of the unfortunate 9/11 incidents. But what did the Saudi government do? They embarked on this massive aggressive campaign of selling Saudi Arabia PLC. So where am I going? Yes, I think a lot of African countries are making great strides trying to, you know, bridge out to the international market. But I think they can actually do much more, whether it's having events once or twice a year where they showcase projects and the opportunities within their respective jurisdictions. Now, coming back to focusing on Nigeria, because I think your question then touched on Nigeria specifically. Yeah, I think the federal government, they've been, you know, making some effort towards demonstrating that, you know, there is some reform in a number of areas. But I think there's a lot more that the federal government can do to make sure they work actually much more stronger with the private sector when they want to engage with the international market. And the reason why I'm saying that is because, you know, with all due respect to those in federal government, in the private sector, we are much closer to the investment community. And we've had situations where sometimes there's a mixed sort of message which the international community does get. And when they speak to us investment bankers and we tell them how things are on the ground. So to the extent the Nigerian government wants to embark on what I should and would advise to be hosting regular road shows in selling Nigeria PLC, it would be quite useful for that to be done hand in hand with the private sector. And as those things are being done, they should actually also promote what are the sweeteners. Now, if I can just close and mention, without picking any specific African country, but there have been examples where certain African countries have held road shows, and people flying from London and New York, and they all seated there, and lo and behold, you know, whether it's the minister in charge of transport or aviation or petroleum, is nowhere to be seen. So I think part of the message is embarking on these road shows, and then for the public sector officials to actually be seen to be taking these things seriously in terms of promoting the investment opportunities in the country, and to be seen to be working in coordination with the private sector, investment bank, stock exchange, and SEC. I'll stop there for now. Thank you.
Thank you, Patrick. And I like the angle you've taken with respect to the IPAs and with respect to promoting the country. I work for the UK Department of International Trade, and our primary job is promoting UK PLC. So we have events everywhere in the world talking about the UK, talking about UK businesses, talking about the opportunities we see, while we are trying to trade with host countries. And in Africa, for example, we have 23 countries where we have representation, DIT representation, with 110 staff across. So it's serious business promoting a country or promoting a region. And I agree with you. That's something critical that has to happen. And the UK government is working with Africa in that regard through the IPP program that I mentioned earlier. I'll go over to Benson to give his own intervention on this particular point as well. Over to you, Benson.
Okay, thank you very much, Lami. I think it's a very important topic. And as Tony mentioned when she was sort of speaking, she did make a very important point, which is that when we are asking investors to come to our market, we need to ask ourselves, what are they coming to do? Why will they come here? At the end of the day, investors will come to the market to make a return that is commensurate with the risk that they are taking. If the risk profile of our markets are high, investors are going to demand for a higher return for them to be able to come to our market. So it comes down to really being competitive, because while Africa has a number of factors that are very attractive, the reality is that, you know, we need to be competitive before investors channel funds to this market. And when you look about competitiveness, I love looking at the World Bank's doing ease of doing business ranking. And when you look at that, it tells us a great deal. You see, the best rated country in Africa is actually Mauritius, and they are number 12. You look at Nigeria, we're at number 131. When you look at that, that is not looking great. But having said that, a year before, Nigeria was 146. And within the space of 1 year, we're able to move 15 places, which means that it is possible for us to make our market a lot more competitive. And when you look at the key issues that are affecting competitiveness in our market, they're very clear. You look at getting electricity, for example, it's something that is a major drag for us. You look at registering properties, it's a major drag for us. You look at trading across borders, we did not very well on that one, paying taxes. Now, for CDC, we are a development finance institution. When we look at coming to a market, we look at two main objectives. The first one is that we want to deliver developmental benefits to the country in which we operate. We want to also do it in a sustainable manner. So if we are not able to see, the prospect of delivering those objectives, it becomes very difficult for us to be able to come into a market and do as much as we want to do. So as I look at Nigeria, I want to talk about two just simple areas, but very significant in terms of how competitive we are in the market. Look at logistics and transportation. You look at, moving things or products, commodities from north to south, south to north, and you look at how difficult and challenging it is. In many economies, when you look at FMCG business, they don't stock raw materials for 6 months because they can't get it. Many businesses would do just in time. The raw materials they need tomorrow arrives today or yesterday, and that makes them competitive. When we look at our roads, the rail, the ports, we see how challenging this is. So for us to be a lot more competitive, we need to address those areas. We also look at power as well. It's very well known here. There is no way we will be able to industrialize Nigeria the way we want to with the kind of power we have. So in talking about competitiveness, we're already making some efforts. For example, you look at the customs, for example. I had the finance minister recently talk about a $3.1 billion reforms in the customs space. We all know that getting things through the port continues to be a major challenge. All of these things will make us competitive, will make our businesses profitable, and will make it a lot easier for investors to do business. The last point I want to make is that if we're looking for foreign investors, let's remember, these foreign investors, they bring foreign currency into our market. And when they are looking at their returns, they're not looking at what returns did I make in local currency. They're looking at the returns they made in foreign currency. It just means that our foreign exchange management needs to be looked at very closely. As we know now, there are many investors who have sold assets, but they have not been able to take their money out because they can't source foreign exchange. That is a significant issue that most investors do not want to deal with. So there are quite a number of points we need to look at to make sure that our market becomes competitive. I'll stop there for now, Lami.
Thanks, Benson. You've touched on quite a number of things, and from the return and risk-reward perspective, I think we have to be very clear that we're in competition with other regions, and we have to do the right thing. So you also mentioned infrastructure and putting in place stuff and customs in different areas to make the process smoother for intending investors. I will go over to Dr. Benson now, basically to give his point on this particular issue. But more than that, I would also want you to touch on the risk elements that you see. So political risk and other forms of risk coming into the continent, and how you think the continent could actually mitigate some of this risk and make it easy for investment flows to find their way into Africa and indeed Nigeria. Over to you, Dr. Benson. You might be on mute.
Thank you, Lami. Yeah, this is a very important question. No, you should be able to hear me now. Can you hear me?
I can hear you now. Yes,
good.
I can.
Excellent. Good. This is a very important question, and Patrick and Benson and Joyen have already brought forward a number of very important points. It's interesting to see that in OECD countries, if you look at the economic stimulus being provided, 20% of GDP, that's what those economic stimulus packages account for. In Africa, on average, economic stimulus is just about 3% of GDP. Now, that can only, I'm not saying that there should be more, because many African countries are already over-leveraged and many resources are already overstretched. But that can only be supplemented by foreign direct investments. So for Africa, it's even more important than some of these OECD rich world economies to supplement these economic stimulus through FDI. So how to do that? Well, a number of really important points were already mentioned. I'd like to mention another point, which is steering away from nationalism and statism during a pandemic or an economic crisis is so important. Just like Patrick, I'm not going to mention any particular names, but a number of African countries over the past few months have steered to the complete opposite direction as where they should have gone to attract foreign direct investment. Closing borders to trade, raising taxes, blaming foreigners for the pandemic or for the country's woes. That is not the way to attract foreigners or foreign direct investment. Another point we have not yet touched upon is corruption. And throughout Africa, corruption remains very much a prevalent issue. And Lami, you asked for a risk perspective. Many of our clients, very often, that their top priority, the way they are most affected by risk in Africa, comes through corruption. It's spending all this extra cash, some of it which has not yet been borrowed yet, some of it which is coming from the IMF and the World Bank and other development finance institutions, or from other donors, more on goodwill rather than based on strong conditions, on preconditions. That cash needs to be spent in a transparent way and needs to go to exactly what it was intended for. A number of African countries have, over the past 5 or 6 months, been caught out with tenders that have gone to ruling party family members, that have lots of money spent on personal protective equipment, etc., which that cash was meant to be for the most vulnerable in African society. That cash has disappeared. That is not the way to showcase one's potential for foreign direct investment. So from a risk perspective, I think, first of all, during a crisis, you have to show your true colors. And you have to be able to showcase to the international community that you are able to deal with the cash, that you are able to spend it on the right things, and to boost transparency. On the other hand, also to make sure that your legislative and regulatory framework remains strong and open to attract these types of investment flows. Otherwise, you're sending out completely the different message. And that's, of course, what increases your risk as well.
Yeah. Thank you, Robert. And I think, aside from everything we've mentioned, the rule of law is also something critical. Most of the time in my own interactions with investors generally, they want to be sure that if there's a conflict in the middle of their investments, they would get fair hearing and fair judgments and or whatnot. So the rule of law is something critical. And I think we should, as much as possible on the continent, make sure we're able to advance that as best as we can. I will go over to Patrick again, and this time around would want to ask for the role of the ecosystem. By the ecosystem, I essentially mean you, the investment bankers, advisory guys. I mean your interactions with necessary government parastatals, MDs, and or whatnot in the areas of attractive investment. You guys are the front line. You're the ones that meet the businesses. You're the ones that see transactions and deals. So what's the role of players like yourself in getting deal flows into the continent?
Thanks very much, Lami. I think, once again, I'll be quite brief to the point. I think so far, the investment banks in Nigeria have worked very, very well together because we work on a number of transactions together. We have a good rapport with the Nigerian Stock Exchange and with SEC as well. I think one of the things really in terms of our role is to be promoting where there are securities that actually come onto the market, not just promoting them domestically, but also promoting them in the international market, helping to actually also be seen as a sounding board to engage the regulators where we see that there are things in some of the policies that the regulators have that perhaps need to be changed to sort of help improve market dynamics. And a number of the investment banks, we have actually been doing that, and I think I without trying to blow the trumpet for SEC and Nigerian Stock Exchange. They have actually been quite proactive in engaging with us. We also need to, part of our role is also to keep our ears very, very close to the ground in terms of what is happening in the international market. And most especially, one of the roles which I saw quite the investment banks and others playing when I first came back was its increasing dialogue with the federal government at that point in time. It has seemed to have dipped. I don't want to go into the details why that has happened, but I think part of our role is also, believe it or not, and I think the government needs to sort of acknowledge this, is to also handhold the government and to guide them when they want to roll out certain policies and things to do with regulation, because we are the ones at the coalface. So I think that is one of the critical roles which I believe that we do play. The other role which we should also be continuing to play is actually working towards promoting and marketing local corporates. Now, there have been a number of transactions which have taken place in the domestic market, primarily commercial papers and bonds. Most of those transactions have actually been taken up by local investors. There's much more that we can do in terms of promoting those securities overseas. But of course, you know, Robert has touched on something which has always been a big concern for international investors. And I said, look, you know, Patrick, would like to come into XYZ PLC's bond or XYZ PLC's commercial paper. We know that there's possibility for investing, whether in local or foreign currency. How will I get my money out? And then, you know, those are, in terms of repatriation of dividends and investments, those are things which really the investment banks, we can only put ideas forward to government, but at the end of the day, the levers actually rests with the federal government in terms of how people actually can repatriate the investments that they've made in the country.
Patrick, I think you've talked about the Nigerian Stock Exchange and the markets and the need for investors to be able to repatriate their funds, but more than just the ability to repatriate their funds. I think, as you will be aware, a number of the investors are also looking for exit opportunities. So ability to exit their investments to other investors or at the capital markets. But the depth of the Nigerian Stock Exchange, I think is a problem as well. And it would be helpful if you could touch on that very briefly. What you think we can do to deepen the market to make big investors that come in know that, look, if you want to exit, there's a strong market willing to provide that exit event for you.
I think the answer to that question really, there's quite a lot which I believe the Nigerian Stock Exchange, working with SEC, has done in trying to drive deepening the local stock market. There are a number of rules which I think might need to be looked at. However, without trying to pass the buck, and I think we just need to call a spade a spade. Even if an offshore investor is keen in coming into the Nigerian market, at the end of the day, there's very, very little that some of the players can do in terms of trying to influence or structure a mechanism whereby they can actually take their funds out. Without trying to mention names, we know that there have been certain corporates that have actually invested in the Nigerian market, and they actually encountered challenges at the point in time when they wanted to exit. And most of those, should I use the word, let me not use the word brick wall, but some of those constraints are constraints which had been, put in place by authorities, above our pay grade, to be quite honest. So I think part of our role really is to continue to advocate to the federal government and also to the regulators in terms of what can be done to open up the market, to deepen the market, and also to provide assurance with regards to how funds can be taken out. Now, there was a time when investors were aggressively trying to exit, and I think I understand that there were queues in excess of 4 months. People who had, made applications in trying to get their monies out, and there were queues in excess of 4 months. In other jurisdictions, you wouldn't normally get that. It shouldn't really take that long. And in that point in time, the market's moved, and the money in which you wanted to get out is at a different value. So I think my message again, I'm not passing the buck, but in terms of being direct, we need just to continue engaging not just the regulators, but the federal government in terms of listening to us, taking our advice in terms of what they can do and what they should do to make sure that investors remain confident to bring their money in. That will help to deepen the market and also the mechanisms through which they can actually exit.
Thanks so very much, Patrick. Now I'll ask a question from the audience, and I'll direct this to Tony. It says, what is the federal government doing to encourage investments from local investors and to promote equity investment in local entrepreneurs? Developed nations have tax incentives in place to de-risk investments. What's stopping Nigerian government and African governments from doing the same? From your own vantage point as an advisor and the investment bank, it would help us if you could shed some light on this.
Thank you, Lami, and I want to thank the person that asked the question. It's a great question and very important, because at the end of the day, it is the domestic market that forms the foundation that attracts a foreign investor to come into the market. So one of the things a foreign investor would look at is, what is the size? What is the level of activity of the domestic investors? And where they see that the market has not been able to attract the interest of the locals who should be most comfortable with the market, then it becomes even more difficult to attract foreign investors. So what should the government be doing? Of course, first of all, is to mobilize domestic savings, because you can't have investments without savings. Secondly, is to ensure that the interest rate regime is such that, and now I'm going into an interesting one that we should talk about. So the interest rate regime is such that it would encourage savings and investment. So where you have double-digit inflation at 13%, and going higher and rising, and then you have interest rates at 1.25%, there is really no reason for any local investor to continue. There's no incentive, there is no encouragement, because in real terms, they are losing value and not gaining value by saving. So the first thing that government should be doing is, and I understand the need to keep interest rates low because we want to encourage investment in the real sector. But how do you strike a balance between, keeping the rates low enough for the real sector to be able to access loans, and at the same time, reasonable enough to attract domestic investment, especially when you have inflation at double digits. By the way, interestingly, somebody will tell you that lending rates have not exactly gone down, even though they've not gone down to the extent that is commensurate with the kind of rates regime we have. And I'll just use the opportunity to say, in asking the question, what is a foreign direct investor looking at? The foreign direct investor is looking at the predictability of even the interest rate regime, the foreign currency regime, so that he can plan and know precisely at what rates, he will be investing his money in the domestic market and not feel compelled to, take everything out at the first opportunity he gets. And by the way, Patrick has already mentioned, taking it out may not also be easy when you have, the kind of challenges. So I'll just leave it at that.
Like FBN Quest and Toyin's firm, and how has that been? Over to you.
Thank you very much, Lami. Most of the investments we have made are really in the private sector, and we have worked in partnerships, but they tend also to be mostly with the private sector. I think the reason that happens is because our mandate is really to support businesses, ensure that growing businesses that are capable of generating jobs and employment in the country. There are situations where we will consider working with the government. For example, where you've got a private public partnership, for example, in infrastructure development. That's an area that I think we can work with government. Generally speaking, the government will come with a concession arrangement where maybe a road, a port, concession for maybe 30 years. And then we work with other partners to make sure this works. But if you look at our country today, I'm speaking more for Nigeria, we haven't seen a lot of very successful PPP projects. If you look at the Lekki-Ekpe Expressway, I was quite, excited when that project was, implemented, because it was meant to be an example of how the private sector can work with government to meet a very pressing infrastructure deficit. But you look at what happened many years after, that project is now government owned. So when you look at it, we don't have many examples of very successful PPP, but we do need to have those. Because the reality is that look at the infrastructure deficit in Nigeria today. It's practically impossible for the government to be able to, on their own, actually meet that. Look at the debt borrowing capacity of the Nigerian government. People tend to talk about the debt to GDP, which is around 25-30%, which looks really low. But we need to look at the debt service burden that the government has. Some figures suggest that as much as 50, 60, 70% of government revenue is going for debt service, which is not sustainable. Also indicating that the government needs to partner with the private sector. And to be able to do that, we need to have the right type of policies. We need to commit long term, because investors want clarity on the long term in terms of the policy environment. These assets are long term, and you cannot start, and when you are midway, something change, and that affects the economics of the project. So the government needs to really think through how we encourage the private sector to partner with government to be able to invest in the country. We haven't seen many of this, but it's an area that the government needs to focus on and ensure that we are able to mobilize private sector funding into these various areas. I'll stop there for now, Lami.
Thank you, Benson. I'm very mindful of time, and I want to pass one more question to Robert. But Benson, it would be interesting if you could, in 1-2 minutes, just tell us what you look at as one of the number one investors. What you look at before making that investment decision in a country or a specific project. Very quickly, 1-2 minutes.
Okay. In just a short while, the first thing we look at is really the partner we're working with. People are extremely important. Work with the private sector. We want to be sure that we are working with people who are credible, who have experience in their field of operations, and they have a good track record and they have integrity. That is very important for us. Then secondly, we want to make sure that in that particular segment where they're working, there is clarity on policies that are going to influence what we are going to do. If there is no clarity, if they're not clear, that makes things, very difficult for us. And lastly, we look at returns, and returns is a combination of many, many things, including the issue of foreign exchange. Sometimes as people who also invest in equity, when you look at the long term and you look at how the currency depreciates over time, that alone may be enough to completely scuttle that project. Because as a foreign investor, you are coming in with dollars, you are going out in dollars. The business may make money in local currency, but you may end up actually not recovering your costs. So that is one issue that we also need to look at before we really invest in businesses.
Thank you, Benson, and you've laid the perfect foundation for the question I was going to ask Dr. Robert, which is from the public as well. So I'll just read it straight away. What solutions would you give to the federal government of Nigeria to mitigate the forex conversion issues experienced by foreign investors? Over to you, Robert.
It's the crucial question when it comes to Nigeria. It's currency conversion, and it's currency repatriation. And it is a question that pops up every single time when you're talking about foreign direct investment into Nigeria. It's important because so far there is no ideological unity within government on how to deal with currency conversion and how to deal with forex. There is a very separate stance by the central bank governor, supported by the president, and on the other hand, the stance which is preferred by foreign investors, by the IMF, by some of the local businesses, and it really has created a schism. And certainly this year we've seen a flip-flopping of policy over the past 5 months or so. We've seen 2 devaluations. We've seen lots of talk about currency market liberalization. I mentioned earlier trying to unify those different currency exchange mechanisms, and that now all seems to have disappeared again. I think my main suggestion here would be, and it comes a little back to what Toyin was saying about incentives, is stop messing around and actually coming to make a clear policy that gives long-term certainty to investors moving forward. For example, the central bank announced, was it last week, more incentives for local banks, or is due to give some more incentives for local banks to invest in national production. And that just came just after the government has ended access to official sources of forex for food and fertilizer. These type of decisions impact a huge sector. Agriculture, agribusiness, import, export, and it takes private enterprise and foreign investors aback these type of decisions. So, in other words, what I'm trying to say is, just like incentives, we don't always need to have reforms or changes. We just need to have longer-term clarity. And changing one's mind as a government, or every time a government changes, can be more detrimental. So, finding one ideology on currency may actually be more beneficial than changing one's mind every 5 minutes.
Thank you very much, Robert. And that's the much we can take. I would go around the panelists 1 minute each, closing statements on the topic at hand. And if you have any advice to Africa in that 1 minute as well. So I will start with Toyin again and go around very quickly, 1 minute.
Okay, so I will just say that it's not all bad news. I think there are opportunities that COVID-19 has thrown our way as a continent, and we need to explore the opportunities. One of the opportunities is an opportunity to look at the newer areas and the areas where there are clear gaps that have been thrown up by COVID-19. So investment in healthcare, for example, investment in ICT, for example, investments in agribusiness, like we have said already. And of course, everything that has to do with the sustainable development goals. There is SDI targeted funding that is available internationally, and we can, in a very structured and deliberate way, go after that type of funding by showing that we are investing in SDI type initiatives. And for us as investment banks and advisors, it's an opportunity to direct channel funding interests into those kind of areas of opportunity. And of course, also the supply chains that have been disrupted internationally is also an opportunity where we can position ourselves as African markets to play in some of those areas as well. So thank you for the opportunity and congratulations to NBCC.
Thank you, Tony. Patrick, over to you. Closing statements, 1 minute.
Okay, I think my closing statement, I guess, to African governments and particularly to the Nigerian governments, just two things. First of all, to try and avoid what I'll call investor fatigue. If you're not ready to embark on a project, please don't make an announcement about it until it's ready. The other point I would like to make is, and especially for the leadership in Nigeria, can you just focus on one or two quick wins, right? Give those two quick win projects as much protection as you want to attract the investment. Because once you get one or two going, then it sort of builds up momentum. And when I say protections, we've seen that some other jurisdictions had to take some pain. I know the Nigerian government doesn't like to give federal government guarantees. To get one or two of these projects going, we might need to make some sacrifices, attract the foreign investors, apply the sweeteners, and once you get one or two of those transactions off the ground, it'll actually give some investors some room for thought as to whether they should put in their whole feet. Thank you very much.
Thank you, Patrick. Benson, 1 minute.
Thank you, Lami. I think my closing point is that there is a lot of money all around the world, including from the DFI community, that are looking for destinations. I think we need to position ourselves. We have a lot of positive aspects in Africa, in Nigeria. The population is youthful, large markets, huge natural resources. Let's make sure we're competitive. We do need to deal with infrastructure, and we need to deal with it on a long-term, sustained basis, not a start-stop change approach. It has to be long-term and consistent. In addition to that, we need to make sure that the whole ease of doing business. We didn't talk about, for instance, the multiplicity of taxes, of regulatory agencies over businesses that are constituting significant constraint to business is something we do need to deal with. And as Robert mentioned, our foreign exchange policy needs a clear reform. It needs transparency, it needs clarity. If we do all of that, we can actually harness all of these resources in our favor, and we can unleash significant progress and growth in our continent and in Nigeria. Thank you.
Thank you, Benson. Robert, 1 minute, closing remarks.
Well, we've been focusing a lot on opportunities. We've been focusing a lot on potentially the positivity that can come out of all of this. I think we have to remember we're not through this yet. We need to stay on our guards, and we have to stop thinking about going back to normal, because going back to normal might just put us all back into the same position where we were in earlier this year. it's really important to, if we're planning ahead, as Benson said, to make longer term plans, to have clarity moving forward, and to plan for the opportunities that are part of what we keep calling the new normal. But let's stop calling it a new normal. Let's not call it going back to normal. This is an opportunity to revolutionize and to reform segments of our economy, and to actually provide the change that is actually needed to bring in this new foreign direct investment.
Thank you, Robert. A very, very big thank you to all of you. I think we've done some justice to the topic and the time we've had, and definitely, I think the conversation should keep going on. This is just the start, and we should keep engaging to get this conversation going to achieve the ultimate aim of attracting more FDI flows into the continent. And we, as the UK government, are keen to support that as much as we can. So thank you very much to the panelists, and I definitely will be in touch.
Thank you.
So I would, yeah, thanks. I would very quickly be inviting Wale back to continue with the rest of the conference.
Lami, I want to say a very big thank you to you as well for moderating that panel excellently. I mean, you know a panel is good when some of your panelists are giving a thumbs up and that type of sign. It shows the passion. So great job. Thank you so much, Lami. And I hope that everyone has taken a thing or two from that frank talk, real talk about the issues that can bring foreign direct investments this way. Thank you so much, Lami. All right, so we'll be moving on.
You're welcome. So, bye.
Yes, cheers. All right, we'll be moving on with the program. Of course, we still have another panel session coming up. This time we're focusing on access to finance for trade and investments. You don't want to miss that. It's something that I'm sure we can all learn from. But before that, I just want to turn your attention to a brief interlude. We'll be having
Don't forget, I have 15 years of fighting experience and well versed in
They took away our pride, our joy was turned to sorrow. Our boys and girls never came back home. And every day we hear cry of a mother mourning her child. Who will take this pain away? They took away everything we had. Our joy was turned to sorrow. Our boys never came back home. Every day we hear a cry of a mother mourning a child. Who will take this pain away? 'Cause we've been broken for many years. We've been tossed around 1,000 times, but all of the sorrow and every part of the pain cannot stop us now. So tell the mountains that we will rise. Tell the roses that we will bloom. And all of our weakness will be our strength. We will fight till we win. This war, we will fight till we win. This war, we will fight till we win. More and me are just strong.
spirit. We never die. Shadows are giants to those who fear.
Shadows are giants if you don't dare.
Shadows are giants to those who fear.
Shadows are giants if you don't dare. Giant. Spirit.
We should go home, sir. Why? You know why, sir? When the sun takes a dip behind the hill, evil in the form of bestial giant spirit, we fall on Ilefe. And beside, you and I left our wife. Our children at home, unprotected. Why the city we are protected?
Okay. Good afternoon, everyone, and welcome to the panel, this panel session, which is themed Accessing Finance for Increased Trade and Investment and FinTech. My name is Kofo Akinkugbe. I'm the MD CEO of Secure ID. Secure ID is a player in the manufacturing sector on one hand, producing smart cards, and also a player in the fintech ecosystem on the other hand, providing digital solutions. I'm extremely delighted to be moderating this session with our panelists and on accessing finance. And with me on the stage, there is a lot of knowledge and experience to share today on the subject matter. And it's coming from three different perspectives. So a very warm welcome to our panelists. Welcome, Mr. Lukayode Kwiton. Thank you very much for joining us. Mr. Kwiton is the Managing Director / CEO of the Bank of Industry. Thank you very much.
Thank you for
also, we have Stephen Gray. Thank you very much. Welcome to the panel. Stephen is the Country Manager Executive of the UK Export Finance. Thank you very much for joining us. And also we have Mr. Patrick Akinwuton. Thank you very much. You're welcome. Mr. Patrick is the MD CEO and Regional Director of EcoBank PLC. Thank you very much, sirs, for joining.
Thank you, Kofo.
Yes, you're welcome. So our theme is quite an interesting one. Access to finance for increased trade and investment and for fintech. Access to finance has always been an important subject, especially when we're looking at the growth of SMEs in developing and emerging economies. SMEs constitute the largest proportion of businesses in developing countries, and that particular sector needs to be given due recognition, because when given due recognition, it will go a long way to facilitate the economic growth, to accelerate it, to increase employment, to increase trade, and of course, attract investments. But the reality is that Africa and Nigeria still have a high unmet demand for trade financing. You know, larger enterprises seem to be dominating trade finance facilities. And SMEs particularly seem to be facing challenges in accessing finance. So, Mr. Quito, I know that BOI is doing quite a lot to support the growth of SMEs. I was wondering if you would like to share a bit more on what you have been able to do and what you're doing, particularly during the COVID-19 pandemic era. Thank you. Ms. Afito, please.
Thank you very much for inviting me, and good afternoon to everybody. Bank of Industry is the oldest DFI in Nigeria. We are 60 years old, so we have survived a lot of things in Nigeria. So we actually understand the country and the industrial sector. One of the areas that we have a major interest in is to support the medium, the small enterprises. And we have increased the amount of our resources that we put in that area. It's a very challenging area. They provide a lot of employment, but at the same time, they don't last too long in business because they have to contend with a lot of things. Even the bigger companies complain about the power situation, about the Nigeria today, the medium-sized companies are borrowing money at between 15 and 25%. That's a lot of money. But then when you look at the cost of financing to the small and medium enterprises, it's even worse. They are paying about 5% flat per month. That's a lot of money. And many of them basically collapsed under this coronavirus pandemic, which is unfortunate because double whammy. The drop in the cost of production of oil in Nigeria is very high, and then you have the corona pandemic. It made things worse. So what have we done to help the small enterprises, the small companies that we deal with? First of all, our cost of lending, the borrowing cost from Bank of Industry is virtually the cheapest in the country, or let me say one of the cheapest. Most of our loans are in single digits. They don't exceed 10%. But that notwithstanding, because of the pandemic, we have further reduced our lending rate to 8% just to help the companies. We've allowed them 3 months moratorium on principal repayments to make things easier for them. Also, we have said to them that they could actually apply to us to restructure the facilities. And if, for instance, they want the moratorium to exceed 3 months, we could let them go up to 12 months, of course, on a case-by-case basis. We also handle a lot of intervention for CBN. CBN, in their own case, they have asked us to reduce the lending rate to 5%. And also, we also have the 3 months moratorium on principal repayments. We also handle the Nigerian Content Development Fund money, which is in dollars, where we lend in oil and gas. The interest rate was initially at 5%, which is good in foreign exchange, but that has been reduced. Now it's at 6%. And so we to help our customers, and we're working with them to restructure. Some of them require more working capital now because of this pandemic. The supply chain has been affected. Some of the people that wanted to import things and have them in 3 months have to now have them in 6 months or 9 months. So we have to show understanding. And then during this era also, the Naira has been devalued, which means those that you give facilities to at maybe 1 to 300, 1 to 360, now have to connect with buying money, if available, at 450, 460. So thanks for understanding what they're doing. So let me But like I said, we have reached out to our customers. Not only that, we are the bank that have been appointed now by government for economic sustainability program, which is about to kick off, whereby there'll be more palliatives given to Nigerians. And some of that actually include grants and payroll support to ensure that people are not laid off. So let me stop here, and then if other questions come up, I'll be able to answer. Thank you.
Yes, thank you very much, Mr. Piton. Thank you. Well, like you said, Bank of Industry is playing a major part in saying to SMEs and other large corporations, borrowing costs is at a single digit. And then with the era of the COVID, there are a number of palliatives that are available for small SME companies. I would come back to you to share more on, how you support, in terms of starting from scratch. It's nice that there are palliatives and restructuring opportunities, especially during the COVID era. How are we primed to support companies starting from ideation stage and actually scaling it up to commercializing it? Thank you so much, Mr. Pitt. Now, with technology driving the financial landscape, we are beginning to see an increase in accessing. The fintech ecosystem is growing rapidly. The banks themselves are acting like fintechs, so they are adopting a lot of fintech customer-friendly solutions. And so, on one hand, the fintech sector, which largely constitutes of largely young startups, requires seed funding to move from ideation stage to actually commercializing it. On the other hand, the banks are using technology to deliver banking as a service. Gone are those days where you have to actually go to the bank. Now you can perform banking on the palm of your hand. And this growing penetration of fintech is actually also playing a major role in closing the gap for the financial inclusion with the central bank has set. So, Mr. Akinto, I'd like you to help us here. I mean, first of all, to just share how banks are providing, how are they primed to provide financial support for fintech, and how are they working in collaboration with fintechs, and even as fintechs themselves to close the financial inclusion gap. Thank you. Over to you, Mr. Akinto.
Thank you very much, Kofo. Glad to be here. Yes, the background you've given is very apt. If I take it from your introduction and my good friend Kayode's introduction, there is quite a lot of what I'll call co-petition going on, collaboration and positive competition with the goal of really bringing financial inclusion to a minimum of 80% of people having access to formal financial services for their day-to-day business transactions. So where were we before? What's the trend? For us, for Nigeria, as at last year, financial inclusion was, at the beginning of 2019, was something in the 48% range. By mid-2020, is in the 64% range. That's close to an average of adding 10% per year. Yeah. And relative to the efforts in the last decade, which was an average growth or differential of 2 to 3% per year. So the collaboration and the opportunity to leverage digital, which we call fintech, so financial services leveraging technology, has played a significant role in this development. Let me bring it to specifics. So when we say access to finance, the starting point is you need to open an account, a formal account, because those we say are not financially included, they're economically active, but they're not being in the financial system is a constraint to the ability to scale effectively. So they're economically active. What we're saying is, what has been the barrier? Why did it make sense to just contribute money amongst what you call a susu or alajo in a local environment as opposed to having a formal bank account? So first, the distribution structure for providing financial services was very expensive. I mean, for you to reach a branch, you probably spend on transportation, security, your time away from business. It will cost you much more than the return you can get for going to save 1,000 naira a day or 2,000 naira a day. We have just about 3,000 branches across the country of formal banks. And therefore, for every business person, over 100 million target adults that need to be financially included, that equation was difficult. So what has the collaboration, fintechs, banks, what has it resulted in? First, we see a massive deployment of financial services on probably the most pervasive distribution channel, which is the mobile phone, be it as an app or on USSD on feature phones, because whilst we say there are over 100 million people that have phones, more than 75% use feature phones, not smartphones. So to actually reach them, you need to be able to provide services on USSD string. That is running. In fact, currently, transactions on USSD string are well in their trillions in terms of value on a monthly basis. More than 40 million Nigerians do transactions on USSD string now. The second is bringing, but the phone enables you to do payments easily. You can receive electronically, but the point to bring cash, which is your active value, into the financial system, agency network has become very critical. So that in your locality, you can save easily 1,000 naira, 2,000 naira daily, as we know our savings culture. Again, working with various fintech solutions and platforms, today agency banking is done at more than, say, 350,000 locations in Nigeria. We expect before the end of the year, there will be more than 500,000 agency locations, where all the banks, including EcoBank, invested equity to provide the seed fund for a shared services agency platform to be deployed. But in parallel, banks are also deploying agency networks. I mean, there are a number of banks, at least I know 3-4 banks have more than 10,000 agent locations now. And so the agency location brings the easy to save, easy to collect, easy to transact, combined with the mobile phone, that is happening. So that's in terms of distribution. But in terms of how do we support the fintechs itself, from ideation to becoming big techs ultimately, and which we really believe is big value opportunity for Nigeria. You find now banks are also beginning to release what you call not just hackathons. You have fintech challenges, you have fintech hubs. EcoBank does an Africa Fintech Challenge every year now. And 2 outcomes. We not only give, or 3 outcomes actually, we not only give monetary awards to winners in that competition, which is all across Africa. And for last year, we had more than 700 fintechs that participated. We've done this now for 4 years running. Beyond that is what we call the Fintech academy that we then induct those who have proven ideas into. What do we do there? We provide access to market for them because we have a huge customer base. And a lot of our customers, SMEs in particular, need access to certain enabling technologies that will make their business more efficient. So we provide that connection point between the fintechs and the larger, whether it's in the edutech area, secondary schools, primary schools in education, because typically people talk of edutech with the universities. But the larger base, there's so many SME schools that are SMEs that need those technologies to be able to be efficient. You talk of agri-tech. Again, each of these, you talk of health tech. I mean, a lot of pharmacies, a lot of small and medium scale people in the education sector, transport tech. So each of these areas, and to make this happen, we have started to deploy sandboxes. That's a major development, wherein these fintechs can easily test their APIs in a safe environment without the exposure to a production environment. And as long as those things work well, SMEs are able to use them, we're able to fund them, and funding is both in equity and in debt capital, because you need patient capital for these things to scale. And it is not necessarily very profitable in the first 3-4 years. You need to be patient, and then you follow through till we arrive at big tech. So there's quite a lot going on in this space. I'd like to pause here and take further questions, but there's a lot of opportunity. There's much more work to do. It's not all done, but certainly we're on the right trajectory.
Thank you very much, Patrick, for that. I mean, you've talked about, the financial inclusion barrier. What exactly is the barrier in opening an account? The fact that there is a proliferation of smartphones, and feature phones, that unbanked sector is able to access financial services on the phones. You've talked about, deploying massive deployment of agency network. Using the agency network to bring the aspect of cash. It's one thing to do it on your mobile phone, but to actually access the cash, the agency network through the body of SAF and SANEF is on board, which is fantastic. And maybe what we'd like to know going forward is, when you talk about the financing of these fintechs, which is quite interesting, what you're doing. How are we sort of hand-holding them? Because a lot of them need a lot of counseling, they need a lot of mentoring. How are we hand-holding them? How are we coming about with acceleration programs to enable them to scale? Thank you so much, Patrick.
Thank you.
Talking about challenges to accessing finance, Steve. Some of the solutions to address these challenges include building capacity of local financiers, building partnerships between international financiers and the local banks, DFIs, building partnerships with governments, in Africa to fund infrastructure for increased trade and investment. And coming from you that have spent decades in Africa and understanding the African terrain, maybe you want to start by just telling us what is UK export finance and why is it relevant in Nigeria? And what are the key highlights towards facilitating projects in Nigeria? Thank you. Over to you, Steve. Steve, I think you might be muted.
Sorry, the dreaded silence button. Kofi, thank you very much for that kind introduction, and it's a real honour to be with such esteemed panelists today. And you ask a very interesting question. What is UK Export Finance and why is it relevant in Nigeria? Well, UK Export Finance is the world's oldest export credit agency. Last year we celebrated a 100-year anniversary. And the mission for UK Export Finance is, as the UK government, is to ensure that no viable UK export fails for lack of finance or insurance from the private sector, whilst operating at no net cost to the taxpayer. Now, if I unpack that statement a little bit further, you know, we talk about no viable export contracts. So there has to be an underlying transaction, an export contract from the UK to a foreign market that we're looking to support. And to be viable, the transaction needs to be bankable in the first place, because as an agency that provides credit risk insurance to banks lending, we're not going to issue a credit guarantee to a transaction that the banks can't see as bankable. Our guarantees are intended to make an already bankable transaction more attractive from a financing perspective if you're buying from the UK. And so if we didn't see that, we would then be failing in the second part of our mission of operating at no net cost to the UK taxpayer. And so in terms of the suite of products that we have, they're designed to help UK exporters win contracts, fulfill orders and get paid. And by saying help them win contracts, what I mean is that we provide for the foreign buyers of UK capital goods and services guarantees to banks lending to those foreign buyers if they're looking to buy from the UK. And in terms of the fulfillment and getting paid, we also have products for the UK exporters where we give guarantees to the UK banks providing export working capital requirements to the UK exporters, or insurance products where the UK exporter is providing credit terms to the foreign buyer, which protects them in the event of non-payment from the foreign buyer. Now, putting that into the context of West Africa, I cover the 15 markets of ECOWAS, based normally in Ghana. And in the last 5 years, we've done well over £1 billion worth of transactions, most of which have been in Ghana. But during that period, we have only been able to do $25 million in Nigeria, you know, Africa's largest economy, and yet we've had a very small amount of penetration in the market. And there's a number of factors there. One of them is in terms of the federal government, the legislation around the Fiscal Responsibility Act has certain limitations of accessing debt capital within that, which prevents the federal government accessing more attractive foreign capital than is available in the Eurobond markets. And then at state government levels, they can borrow only in local currency. So we've seen some friction in the system there through legislation. I'm pleased to say that, you know, we are, as UK Export Finance, able to offer credit guarantees in Naira. And whilst those don't necessarily have particular value with the federal government, because banks like EcoBank and Bank of Industry will see that as a risk-free clients, when you go down to sub-sovereign and certainly the private sector, there is an arbitrage between what the government borrows at to what the SME sector pays. But again, I've seen some of the challenges I've seen is with the behaviours of the banks, and I'm really pleased Mr. Pitan is here. You know, the Bank of Industry is one of the leading examples in Nigeria of how to get affordable finance to the SME sector with the initiatives that they have. But if you look at a program like NERSAL, for example, where the central bank are providing credit guarantees to banks lending to the SME sector in the agricultural space, all too often you see them taking the guarantee, but they're still charging 27-30% interest rates on that loan. And so the banks are not sort of reflecting the credit quality of the guarantee in the pricing to their SME customers. So I think there's a debate and a discussion to be had around that. What is not working in the NERSAL guarantee system that allows the banks to actually offer lower interest rates because of the credit quality there? For us as UK Export Finance, our guarantees come with the credit quality of the UK government. And so, you know, that has real enhancements in terms of the foreign borrowings for private sector and the federal government, where the loans carry the credit quality of the UK government. And, you know, we see very attractive rates attached to that within the markets that we support across Africa. And so we can do medium to long-term transactions quite meaningfully. And also in the smaller space, we have a product that will go down to $500,000. So the SME sectors, if they are creditworthy, if their corporate governance gives people comfort, banks like EcoBank and others, comfort to lend, then, subject to the structuring of that transaction, we can come in and provide that additional credit enhancement that allows them to offer more attractive rates. But again, I think there's still some regulatory issues there in terms of capital relief on the capital adequacy requirements in Basel III there. But I'll leave it there at that stage. Back to you. You're on silent, I think.
Everything you've said, I'm sure sounds like music in the ears of SMEs and the private sector and also the government sector. And we just can't wait. We hope that the barrier and the friction that you're having would be removed so that you can actually play a major part in a very potentially big market. Okay. And we would like to see, more of your presence, more of the UK export finance presence in the Nigerian market. Mr. Quito, with Bank of Industry, I know that for sure because, I'm starting a business as an SME 15 years ago and having to access finance was we found the rates friendly, and then taking us to a stage where you're actually commercializing the ideas and us getting to a stage where we're now a major manufacturer exporting to different countries in Africa. You must have some success stories that you would like to share just to encourage the audience listening that these finances, funds do exist. And it's not just lip service, but it does exist and it can be accessed. Thank you.
Yeah, thank you, Kofo. I've heard that also at Bank of Industry. Maybe you only cater to all the big boys and you don't allow the small companies to come up. That is not true. Actually, if you look at if you take an example, for instance, the creative sector, a lot of talented Nigerians, either into script writing, into acting, photography, different kinds of things, costumes and everything. Most of the banks could not finance them because they didn't have the right type of security the banks were looking for. Bank of Industry had to come to that sector. Today, we are the biggest lenders in that sector. Basically, most of these big names that you see now, some of those films that you watch, we actually finance them. Most of the film houses you have in Lagos were financed by Bank of Industry, and we are proud of that. The banks are coming now, and we say, look, we are not competing with the commercial banks. We are to facilitate business, That's just one example. But then there are other things that we have done. Right from when people are in the NYC camp, we have facilities for young graduates. And the security is not generous, all we ask them for as security for that small loan they can start with is a certificate. You have a BSc degree in economics or in medicine. With your certificate, you can actually borrow money from Bank of Industry if you have a good proposal. It starts from the level. Look at the government program, like the JIP program, the trader money. The idea behind that is that there are so many Nigerians who are out of this financial inclusion. And we keep on talking of it. But we have to make it practical. Because you're going to borrow money in some advanced climate and things like that, you will have a credit history. You have been rated. It's very easy to know who they are dealing with. In Nigeria, we are still building that kind of database. So we are saying, let us start with some amount of money. 10,000 naira, no security. People say it's very small. Yes, but the idea is that if you borrow 10,000 naira, we from Bank of Industry, we are making you part of the financial inclusion because we now have your data. If you repay this money, then we increase what you can borrow from Bank of Industry. And some companies, you're asking for some winners. Do we have examples? We have many examples, and they are all over the country. You know, I was looking at, like in Kano, for instance, we have a company called Rumbu Sachs. You know, in fact, the MD, you know, Alhaji Buhari used to be in the house. He decided to go into manufacturing. You know, the first amount of money he got was small, less than about 100 million some years back. Now it's a big company. From staff strength of 231 that they had in 2001, today they have 1,382 staff working in that company. From turnover of 500 million, you know, at that time, they are doing about 5.2 billion naira annually now. You know, you leave that place, you go to even Innocent Motors. You know, now we are proud of Innocent. You know, this is one of the, well, in Nigeria today, you probably say it's one of the leading companies in manufacturing, assembly of cars. The first loan that Innocent took from Bank of Industry was small money. In fact, it was through the NADDC fund in 2004 that the company started. And the loan was very small loan, maybe about 130 million. Now you have a company that has about 3,000 direct staff and about 10,000 indirect staff. And they are able to export their products outside Nigeria. You know, we have people that give money to farmers, Babagona, you know, have all this clutter farming and things like that with implements, you know, and the company. Even your own company, you know, Secure ID, you're one of our success stories, you know, and we have so many of them. And like I said, they cut across the whole nation, you know, from the north to the south, from the east to the west, you know. People that we help with 10 million naira, you know, became 50 million, 100 million, now they're taking billions, you know. We actually induct them to what we call BOI Hall of Fame. And there are quite a few companies that we have in that sector. So we are saying that the small, and the other thing we're trying to do, because you'll be hearing of CBN has about 200 billion plus money that is, you know, meant to be lent to the SMEs. But most of these funds remain in CBN. Why? Because when the commercial banks access these monies and they lend them out, you know, most of the banks lost money because the risk of lending to that sector, you know, it's very high. You know, we at Bank of Industry, we have a product, we call it matching funds, which means we go to a state, we talk to the governor, we partner with the state, we tell them, you know, we want to encourage lending to SMEs in your state. Whatever amount of money you give us, we will match, and all of that money will be lent in your state. Today, we are working with about 22 state governments, you know, offering that product. The truth is that when you look at the NPLs, you know, for those who are not technical, non-performing loans in that area, it's very, in some states, money is lost completely, you know, that are now chasing to recover the money because the average thinking of, I hate to say, Nigerian, is that when you are borrowing from a Bank of Industry, you are borrowing, or the scheme that is giving you money for your production, for your industry, for your company, comes from government. They take it as their own share of national cake. They don't plan to repay the money. Commercial banks led that area, which is why it is difficult now for SMEs to access funding in Nigeria. You know, the people that lend them money, essentially, you know, are the microfinance banks, you know, who stay around the area. The cost of collection is very high. If they lend you money, they have to have people who will come to your shop at 4 o'clock in the evening and collect money every day. So even if they want to give you low cost money, it's impossible because of the cost of recovery, the cost of servicing those facilities. So what are we doing now? We have now told government, we need to help these companies. Somebody has to bear the cost. You know, we have to have a de-risking facility whereby we can tell the commercial banks, please lend to this group of people. If you lose money, we, Bank of Industry, will be the first, you know, we take the first loss. You know, interestingly, we actually approached a few insurance companies in Nigeria, some of the leading ones. I won't mention them. We had meetings with them over several weeks to say, can we come up with a product that can allow banks to lend to SMEs? They said, no, we will not touch it. Because at a particular time, they had credit bonds that they developed in that industry to help lending, and the insurance companies lost their shares. So they said, look, we are through with this. You will not touch it. You can touch it. So we now at Bank of Industry, we're working with government to have a risking facility that will take and share risk with commercial banks to lend in that area so that we can actually help the SMEs, and because they are the majority in the country, otherwise they are dying and many more might die. Thank you.
You need to unmute, Kofo.
Thank you very much, Mr. Akwiton. That's very encouraging, especially for companies that are starting up, for SMEs as well. I expect the SMEs and the audience to come up with a lot of questions. Here is your chance to ask BOI as to what facilities are there, what instruments that are there that are available to help your businesses. Before we go to general questions and answers, I don't know if Mr. Akwiton can just take on Steve Gray on some of the comments that he made, because there is a lot of synergy between the UK and Nigeria. And if these guarantees and credit guarantees are available for buyers in Nigeria, between buyers in Nigeria and exporters in the UK, what is stopping it? Why are they not able to partner with the banking sector to be able to give out a lot of these trade facilities? Thank you. Mr. Akwiton, please.
Thank you very much, Kofo. I think, first, let me put on record, EcoBank, we work closely with both BOI, and we also work closely with USAID in particular. And we also work closely with development funds out of the UK for supporting extension. As you know, we operate in 33 countries across the continent. But in Nigeria specifically, we also work with NISAL. But I think part of the issue is there are two parts of the support area. So there is the funding, which is the cost of the funds. In most cases, whether it's with BOI, whether it's with the UK, we do get, as a bank, we do get relatively low pricing that we're able to pass on to the SME or to facilitate trade. The challenging part, and we also get quite a lot of support on tenure. So the flexibility, if you need to extend tenure, clearly we get a lot of support. The challenging part is the credit risk. And I think Kayode touched a bit on that. The credit risk aspect requires more collaboration from all of us to fix better. I like the point raised about talking to insurance companies, because the concept of effective insurance is that the insurable units will be so much that the claim of a few units will not make it unprofitable for the insurance entity. But the cost of the historical cost of insurance collection has been very high. So the insurable units are not as high. I think we have an opportunity now, leveraging technology. And I've seen a number of first steps being initiated. And I'm using the opportunity to both Kayode, Stephen, and ourselves, or any other bank, I think we need to plug in that supporting small unit insurance payment platforms that will enable, because in Nigeria, if you pick Agric has the highest number of employed people in Nigeria, in the economy. If everybody then knows that paying 5 naira a month makes it easier to have credit guarantee that shared between the bank, the insurance, and the various development agencies, I think we may be closer to solving the credit risk. The second part of the credit risk is the most important value for somebody in Agric. I'm using Agric as an example.
Yeah.
Is the land or access to the land that they are using. The ability to monetize the fact that you own land, given all the land recording or reporting processes, has been a major disincentive. So these parties have assets that is in quote, dead assets, because they're not getting the value for it. And the bigger your land assets, the more problem you have, because your credit need to use it effectively is a bit higher, and you do not have the kind of fallback opportunity that can even make sense for an insurance company to say, okay, because the uniqueness with Agric, for instance, and I'm using Agric because it touches a large base of the value chain that we're talking of, is that if you do not pay, but you can keep farming, you should have an opportunity to continue to farm and use the value of your product to be able to then repay. So the documentation should be such that it is not that your land is necessarily taken away from you, but the value of your land from the produce, you start earning like a rent, like somebody renting rather than owner. If we can crack these two aspects, just my thinking, and I'm saying it openly, is something I'm ready to commit EcoBank to work with such partners on directly. We can therefore solve that third aspect, which is the credit risk aspect. There's a lot on the tenor, there's a lot on the pricing. I give to both parties on this call, I can vouch that comes. We need to solve that third aspect, and I think the area of, we're ready to commit some funds in terms of seed capital to walk through that. I would like to do it together with my brother Kayode. I'd like my good brother Aliu in Naisal. We can crack this. We should challenge ourselves for this third aspect in order that we're able to really unleash the full power of what is possible before us.
Thank you very much. Thank you, Mr. Kyoto. Stephen, as you can hear from our two bankers here, there is hope. And I'm just looking at how can, now hearing that, you know, the banking industry actually has the willpower to make and accelerate access to finance to businesses in Nigeria in order to increase trade. How would you position UK export finance going forward? I mean, hearing this, just very quickly, then we'll take one or two questions that we have here.
So, Patrick, yeah, I totally recognise all the comments you made there, and in terms of the dead capital issue, I think that's part of a much wider programme where you need to have national ID systems, electronic addressing systems, so you know where where the people live, and connecting that with an electronic land registry system, and that has the impact, as you say, of unlocking the dead capital in the land, but also gives the government the opportunity to start putting real taxation on the lands, so that they can broaden their tax base and give confidence to the banks that when they're lending against that property, they know who owns it, they know where they live. And in terms of that side, we have UK companies that have been leaning into a number of governments across the continent to provide solutions in that space in terms of digitization and land registry. But going in terms of working with the banks in Nigeria, we've always had appetite for working with banks in Nigeria. And one probably that's worth highlighting is that we're working with Nexim, Nigeria's export-import bank, where in transactions, particularly in the mining sector, where perhaps we may not be necessarily comfortable on the credit risk of those Nigerian borrowers buying UK products or services, but Nexim, because of their proximity to the clients, are more comfortable and can issue a guarantee behind the Nigerian borrower. For us, the credit risk moves to Nexim, and that then unlocks a lot of transactions to be able to support. So we are in the market, we are working with Nigerian banks in that space, and my earlier comments were not targeted at anybody on this panel, but sort of a generic observation of what I've seen in the market over the last 3 years. But we are open for business, and I think the difference between us and the insurance companies that Mr. Pittown was talking about was that we're very much transactional. We need to see an underlying export contract to provide that credit insurance, rather than sort of the securitization of a portfolio of transactions already written.
Okay. Thank you so much, Stephen. Thank you very much to our panelists. We do have just a few. We have a few questions here. We probably won't be able to take every one of them. But there's a question that goes to Mr. Pittown, BOI. Is there a way BOI can partner with AFDB to access loans to SMEs at a good lending rate, especially at this pandemic period?
Yeah, thank you. The answer is yes, but also there are technical issues to overcome. As at now, we actually have facilities from AFDB, and their facilities are possibly the cheapest in our books. But is that when you're taking money from AFDB, the money will come in dollars. So it comes in dollars, it is cheap in dollars. But if you lend it, to them in dollars, then when you have devaluation, the people begin to have a problem of repayment, or even the availability of the US dollars to pay back. For instance, early this year, BOI accessed the international market to raise funds. We actually raised €1 billion, and the rate, it was very good. At the time, raise money, we were able to borrow actually below the sovereign rate. But the question is, if you have euros or you have dollars, what do you do with it? We have to take the money to Central Bank of Nigeria and do a swap, so we can have naira, so that we can take away the foreign currency rate risk. So by the time you borrow the money in dollars, you have to add the cost, the swap on top of it, before you can lend. Which is even why we as BOI today can lend money at sub 10. Because we are swapping foreign money at lower rates for naira. If you are looking at inflation in Nigeria at about 13%, and somebody is borrowing money at 8%, at 7%, definitely that money is subsidized. So we are doing that, but we have to cover ourselves as a bank. So we can stay in business. We have to swap it. That is why the cost is close to 6-7% when we are lending, because we lend in naira. The only lend in dollars if the people who are borrowing the money also have foreign currency receivables.
Yes. Thank you very much, Mr. Pittown. So the next question, I believe the chambers can see to it, which is how the NBCC members can access BOI funds. The chamber can definitely get back to the NBCC members on how those funds can be accessed. There's a comment here, it's not particularly a question, but it says, it is tough to have insurance cover moral risk. Credit risk is categorized under moral risk. I don't know, Ms. Akuto, do you want to just add to that comment?
Okay, thank you very much. the fact of the matter is that moral risk is related to what the environment permits. So, for instance, which is basically integrity and willingness to pay.
Yeah.
So today, the industry has come up with what you call Global Standing Instruction, GSI. Yeah. In that scenario, using your BVN, if you borrow money and you fail to honor your credit, anytime 1 naira of yours comes into the system, it will automatically be drawn to start repaying your loan. The point was made about identity. When people feel in an environment they cannot be easily identified, the commitment to high moral standards gets affected. It's not a Nigeria issue, it's standard behavior. Because within Nigeria, people do not borrow and fail to pay within their local community. When you borrow within your village, when you have association of market women, if you have association of traders within their market or within their village, they do not borrow and fail to pay. But when they borrow from an entity that cannot find them or cannot identify them uniquely, the propensity to say, I can dock, is very high. That is gradually being addressed. And I see that we can accelerate those things because SMEs and the corporates will also come under GSI shortly. It's the second level. What does that begin to do? As more government policies make access to health, access to services requiring you to pay, not in cash, but from an official account, because now there are agencies available everywhere. Agency used to be on POS, but now, even in EcoBank, our agency is on mobile phone. So as long as you have a mobile phone, you can be an agent. In terms of educating people, there's much education going on. If you look, even for us, we partnered with NEPAD and other African Union Development Agency to do an SME academy. We work with Lagos Business School, entrepreneurship program, to also explain to people that it is actually cheaper to honor your credit and seek for a new cycle than default, because the cost of default going forward is going to be very high because you're going to be shut out of the system. As those things mature, clearly we will see less of the moral question, higher, the same moral question will go for, if I'm seen to be a good credit person, my cost of borrowing will go down. And that's the next phase we should get to.
Yes.
So I'm very optimistic. It's a time phase. We must keep the focus. These 200 million people, it's a huge market. The African Continental Free Trade Zone is coming up. It's a huge market, 1.4 billion Africans. The platforms are there. The policies are getting better. It will take just a phase, and we will get into that scenario where more investors, more support will come. The payment flows will be easy to track. KYC used to be a major issue. It's improving. It's a major issue, but it's improving, and we will get there. Thank you.
Thank you very much, Patrick. Thank you. So just 1 minute. Stephen, I hope we would like to see the £1.5 billion, for instance, come into the Nigerian market to fund it. But how is the UKEF poised towards the currency changes? Because you do give credit guarantees, but how do you react to the currency changes and fluctuations?
So in terms of the currency challenges, where the transaction is in hard currency, we do expect to see, we do as part of our due diligence, look to understand what is the exchange risk associated with that, and that will have an impact on how we credit rate the particular transaction. It is an issue at the moment, and so we would have to understand the individual details. When it comes to Naira, the guarantees, there is also an issue around crystallization, where we would have to convert sterling into Naira to cover the obligations under that guarantee. But those are sort of technical details that we would get into around the individual transactions. But you're absolutely right. As a market risk appetite for Nigeria, we have £1.5 billion available. We have no exposure in the Nigerian market. Wow. And we are open for business and keen to do business on the strength of the exports from the UK. And so as a result of this pandemic, where people have suffered from the interruptions on their supply chains, if they look towards the UK for a more reliable, robust supply chain, UK Export Finance can be there to help support attractive financing in the purchase of those capital goods and services.
Yeah. Wow, thank you very much. Thank you very much to all our panelists. We will just have a wrap up from each of you just for 1 minute, starting with Mr. Quiton. Just a wrap up. What message do you want to conclude with for a minute?
Well, thank you very much. I will summarize and say people have to realize, especially the SMEs, that honesty pays. When you actually pay back what you owe, you can get more credits. There's a lot of funds available, but they're just looking for good, honest people to give the money to. But the money is available. Honesty pays. Thank you.
Yeah, thank you. Mr. Akweton, wrap up, 1 minute.
Thank you very much. I agree entirely with Kayode. Honesty pays. And there's a willingness on the part of the banks, on the part of EcoBank, I can state that. And the opportunity is huge. And the future is very bright. Let's embrace it rightly, and we would move to greatness, from SME to big tech to mega companies. Yeah. Thank you.
Thank you very much. Stephen Gray?
Well, there's not much more to add than the previous two gentlemen, but other than to say, the UK supply chain is there, it's robust, it offers quality, you can trust what it delivers, and the UK government is there with appetite for Nigeria through UK Export Finance, and we'll work with all partners.
Yes. Well, thank you very much to our panelists. Thank you, Mr. Kayode Pito. Thank you, Stephen Gray. Thank you, Patrick Akimoto. Thank you very much for your time and the knowledge that you have shared. And thank you to the audience for listening. So I will just invite Oluwole Famuerewa back on the stage. Thank you very much.
Many thanks to you as well, Mrs. Akikugbe, for moderating that panel session. Useful insights for everyone who is looking for finance, and as has been reiterated by the panelists, honesty pays. So that's the way to go. All right, moving on very quickly. I'd like to now invite the Deputy President of the Nigeria-British Chamber of Commerce, Mr. Alan Davis, to wrap things up for us with a few announcements and, of course, a vote of thanks. So, Alan, I see you already. It's over to you.
Yeah. Thank you very much, Wale. This has been a riveting afternoon. The conference has been great, and I'd like to congratulate all involved in organizing it and participating in it. It's now my pleasure to give the vote of thanks. So firstly, I'd like to thank all our rock star speakers and superstar panelists, and in particular, Otumbani Adebayo, Minister of Industry and Trade and Investment, Katrina Lang, British High Commissioner, and Ben Llewellyn-Jones, the British Deputy High Commissioner. Also worthy of our warmest thanks are our headline sponsor, the Bank of Industry, our partners, the Department of International Trade and the Federal Ministry of Industry, Trade and Investment, our council members, all the exhibitors, our attendees, the NBCC Trade Mission Committee, the Programs Committee and the Secretariat for organising this enlightening conference. Thank you to one and all. Finally, I'd like to take the opportunity at this point of alerting you to all of our upcoming events. On September the 22nd, we have our Advocacy Roundtable themed Economic Recovery Beyond COVID. On September the 24th, we're hosting a webinar organized by the Professional Services Group themed Building Technology-Driven Organizations. And on September the 30th, the Construction and Real Estate Group has organized a webinar themed Affordable Housing, the New Frontiers. On October the 15th, we're holding another webinar themed Nigeria's Telecommunication Industry Post-COVID. And October the 22nd and the 23rd, the NBCC is holding the African EduTech Conference themed Jobs, Education and Technology, the New Normal. So we'd be very happy to welcome everyone present, whether your company is a member of the NBCC or not. But of course, we prefer you to be a member of the Chamber. So if you're interested in joining the Chamber or attending any of the events, please contact Osorime Okwe, whose details are provided in the stage chat box to the right of your screen. Thank you very much. So let me hand back to Wale.
Thank you. Yes, I'm right here. Thank you very much, Alan.
Good. My pleasure.
Short and sharp, but valuable insight into what the Nigerian-British Chamber of Commerce is doing. Several events that you can take advantage of there. Thank you so much, Alan. And on that note, it's pretty much almost good night, actually. I won't say good night just yet, because I have a couple of things to share with you. First of all, I want to emphasize that you can still participate in the expo. So please look to the left of your screen and take advantage of the expo and check out some of the exhibitions, products and services that you may need. And then, of course, I want to encourage you as well, before you leave, you can also take a look at the networking function field and take advantage of that and connect with somebody that is also here as well. Very shortly, we'll be playing another video for you. And by the way, all the videos that you have been seeing up to this point are courtesy of Bonale Austin Peters Productions. So you want to encourage Nigerian for the great work that she's doing. And I want to also mention that we will be open till about 8 p.m. So you still have the opportunity to check out the expo and, of course, use the networking field to connect with people on this Hopin platform. All right, so on that note, I'd like to say it's been great participating in this personally, and we look forward to the next event. Thank you.